Go off the charts with technician Bill Baruch, president of Blue Line Capital. So, Bill, walk us through what you see.
Thank you. Happy New Year, Melissa. Thanks for having me on. The three stocks I'm looking at, and I'm taking this from a viewpoint here that my job as a portfolio manager isn't to create wealth, but add value and preserve wealth. And so let's start off with Chewy here. Chewy had a meteoric rise throughout the year. Really had a sort of a COVID stock, but it's taken a big hit here in the last week. We've seen a lot of air come out after the reopening, some of the coming out of lockdowns, the vaccine news. But really, this stock, I think, is here for the long run, and it's coming into an area of value. I love being long this stock, as low as 75 bucks, anywhere from here down to 75. I think there's tremendous support. Again, revolutionizing how you're going to take care of your dog, and the medicine's even much cheaper coming from there too. So there's a 382 retracement coming into the 75 bucks. That's a big support level. And I think it's going to respond. That was an initial high. The next stock is Salesforce. I've been on here before talking about Salesforce. It's a stock that I really love. And I think it needs to be in your portfolio. The Slack acquisition really hurt it over the past month. But ultimately, I think you're going to see it come out of there. It's a great acquisition. I use Slack with my company. I love the software there. And the soft Q4 guidance actually could really open the door for a really well performance coming into the first half of next year. I think that is really a great way to look at it. And then you got the technical support here at 220. This is a 382 retracement. Covered at the 382 retracement as well with Chewy. That's a big area. When a market is in a bull trend, it holds that 382 retracement on pullback. As well, you have the gap from the August 28th pre-earnings close. So a lot of support in there. And even if it gets down to the 50%, right around 200, that's a big round number, a lot of support down there. I expect that to perform. And as we diversify out a little bit, looking at Dow Incorporated, this has broken out above a trend line from where it was spun out. And it's lingering right around $55 right now. It is in a breakout, arguably, above that trend line. You now have some good support down at 50 to 52 as a rising trend line coming out of this wedge pattern. Still hasn't made a new high from that spin out above 60 bucks. So we still have some work to do there, but you're getting a 5% dividend in this stock too. Good technical tailwinds, but again, that 5% dividend is a great way to diversify right now as you're looking to add value to a portfolio. But remember, infrastructure spending from the new administration, strong Asian demand. There's a good fundamental story here behind this stock as well.
Hey, Bill, which of these stocks, if any, are supported by positive indicators on the charts for their industries?
Well, I like the materials right now. I think this is really an undervalued sector. Materials, industrials as well. Industrials had a big move over the past, say, 30, 60 days. But I think materials, you get a little of inflation and infrastructure spending. I think that is really going to be a great sector that's going to perform through 2021 and a lot of value and good dividends.